Hello, and welcome to our exciting roundtable on virtual money, reshaping post-pandemic payment technologies. We have a great lineup of illustrious panelists. I'm not going to take time to introduce them all now so we can maximize our time for discussion. But if you'd like to know more about them, please visit the speaker bios on the forum portal. So let's dive right in. It's become a widely quoted figure that COVID-19 has accelerated the adoption of e-commerce and digital payments by 3 to 5 years. Right? We've seen contact solutions, mobile banking apps, a growing number of new ways to pay, like digital wallets, QR codes, buy now, pay later. We've seen all these things really proliferate. So let me ask you all, how has your organization changed its approach to payments in the commercial sector and for consumers during the pandemic? Let's start with Jeremy.
Thanks, Julie. Really appreciate it. It was really remarkable just looking back over the last 15 months and seeing this. So, Circle, for people's background, we operate something called USDC, which is a dollar digital currency, and it is a payment technology that works on the public internet, on blockchains. And going back to really the inception of the pandemic, like February, March, we literally saw this incredible transformation that happened right as the lockdown started happening in Asia and the US and Europe and other places. And so just for perspective, in March of last year, there was something like 400 million USDC in circulation, which was, a good number, is a significant number, and now we're about 50x that size since that period of time. And so the amount of dollar digital currency that's gone into circulation has just exploded. In the aggregate, the amount of dollar digital currencies in circulation is over 100 billion now. USDC itself has grown to 25 billion USDC digital currency units in circulation. And even just since January of this year, where we started January 1st with 4 billion in circulation, now at 25, just it continues to grow. What's interesting is this is happening globally. We're seeing demand from all around the world for people who want to transact in a digital currency to be able to safely, affordably, and easily move money around the internet, similar to how they can share data and communicate. And then just in terms of volumes, we've over the last 12 months, we've seen almost $700 billion on blockchain transactions using USDC. So the transaction volumes have also exploded. And so that literally had correlated to the inception of the pandemic. And then I think it is part of this broader kind of leapfrogging of moving from legacy technologies or legacy business models into more natively digital business models.
Martha, what's your perspective in the Philippines?
Okay, so the Philippines has one of the longest lockdown periods in the world. So, and due to the quarantine restrictions, we've seen really a huge shift to online behavior in almost all aspects of our daily lives. And what we've been doing is practically just following the consumers' behavior, whether it's building virtual communities. We find like merchants now in Viber, in Instagram, in Facebook Marketplace, all those stuff. And good thing that when the world closed down on them, on their physical stores, they found a instrument in GCash, in a way to receive and send money in a cashless and safe way. We've also seen the non-contact revolution that has led people to go to e-commerce for their essentials. So people are buying groceries, utilities, and GCash provided a safe and easy and secure mode of payments. So we've seen exponential growth, not just in subscriber base, but also in merchants that we are enabling. So before we only had like 75,000 merchants before the pandemic. Now we have more than 2.2 million merchants and social sellers using our QR and P2P platform. Our subscriber base back in January 2020 was around 20 million subscribers. Now we're at 40 million, comprising 40% of the population. So really exponential growth, and even the types of services that we offer actually are have expanded from before simple send money, just showing your numbers using the mobile numbers, but we've expanded QR, P2P. We've also done mini app, which is normally just seen in WeChat or in and financial products, but now we have it in GCash through GLife, where we house various apps. And what's interesting is this allows people in the Philippines who have smartphone. By the way, smartphone penetration in the Philippines is high, but the challenge is the phone book memory. It's the phone memory, and therefore people are challenged to prioritize the app that they download. So this solution allows them to don't have to prioritize the apps that they download because everything's inside the GCash app now. So that's how we've evolved. Also, we've expanded into financial services. We recently launched global funds, which was unheard of before among the mass. It used to be just for the rich to be able to invest in funds, and you needed millions of pesos just to get to that. But now, for as low as $1 for local funds and $20 for global funds, you can invest. And so, like, our advertising is around, okay, rather than buying a Starbucks, you can put your money and invest your money in global funds, right? So those types, and we've expanded also into credit, even insurance. That's less than $1. So for less than $1, you get an insurance for COVID and dengue, which are like prevalent sicknesses in the Philippines right now. So that it has allowed us to innovate, but again, always following the customer and customers as our North Star. And we have Jeremy and Ran here, and we're also probably in the future looking at crypto, even global trading and local trading as well.
Okay, so really tremendous growth in users of digital wallets, and that goes to the smartphone penetration, and it goes to what the pandemic, I guess, really drove people to move online and look to digitalization. Let's get the perspective from Dax, from the big bank perspective with HSBC.
It is so exciting with HSBC. We always talk about opening up a world of opportunity, and that is exactly why we're here. We're so focused on our clients and our customers and really listen to what they need and require. And we're always focused on digitization, so making sure that we have a seamless experience. There's always more to do, and that's the good thing about the job. In order to enable our customers to live their day-to-day lives, we are very focused not only on our payment technologies, but digitizing those simply. So we become an enabler to everybody wanting to achieve their goals in life. And we really support that, whether they are a personal customer or a business customer or a client. And the beauty of HSBC is that we are global, so we are able to connect all of those things. I am personally very deeply grateful for the ethos within HSBC and how we appreciate this with our values. And we are also very focused on our global leadership and making sure that we do what we can for the environment, our net zero policy, all of those good things, and looking at, the simple view of payments and how, you look at a more cashless society, actually by minimizing the mobilization of cash, we can also reduce emissions globally. So not only are we driving payments and enabling day-to-day lives, we are actually working on some very key initiatives to make sure that we action global good. The other thing about this, and I always bring payments akin to communications. If you take your phone, for example, there are so many ways to communicate these days. It's often, how do you simplify that? And equally with payments, there are so many different ways to make a payment. It's really how you make life simple for the customer and the client. So there's some really exciting opportunities within HSBC. And the good thing about this is that not only do we learn from our local expertise, so be global and be local, but also we have the power and the leverage to impact the global economy as well.
Let's go from that global perspective, and we'll come back to more of some of those things you touched on, Dax. Let's move to South Africa and hear from Jan on what he's working on there.
Good afternoon. Yes, so I am working for the largest clearinghouse in Africa, and I will probably bring a slightly different perspective, because just to give you a sense, in South Africa today, 9 out of 10 payments are in cash. Even though many people have bank accounts, they basically transact in cash. The issue is that also South Africa was probably one of the countries with the harshest lockdown at the beginning, and that brought significant economic hardship on people. People couldn't, they lost jobs because most people are working in informal economies and they couldn't feed their families. So the government had to, together with the banking sector and other payments ecosystem providers, they had to find a way how to distribute, they call it COVID social grants to millions of people in South Africa. And it was about distributing around $25 a month, which is a significant amount of money for people who really struggle to put food on the table. So we realized that it's not easy in a cash-driven economy. And by the way, the lockdown actually caused our digital transaction to go down to 20 or 30% of what we were seeing in the normal days. So for us in South Africa, most of people started actually reverting to cash. The good news here is never waste a serious crisis or bad experience. So what we now realized across the industry, including government, is that we need to change the culture. We need to change how people believe, how they transact with financial services. And one of the other aspects is in Africa, many people, they don't have any documents. They don't have birth certificates. So having proper digital identity where people can verify their claims and government can assess if they can pay these people or those people, all of that is now coming together. And I feel we are gaining a lot of momentum to change and really move more into the digital space.
Great. And one company that touches many of the aspects of what we just heard and the types of companies that we just heard from is Visa. So let me turn to Salvador to get a look at how Visa is seeing all these changes.
Thank you, Julie. Good afternoon, and thank you to the Qatar Economic Forum for the invitation. For Visa, as you can imagine, we have been very active supporting both our clients to make sure they would have the infrastructure ready, and separately ensure that consumers and merchants, buyers and sellers, really have the right technology and the tools to deal with the pandemic. I would like to emphasize probably just 3 trends that we have seen across the globe, but I will make some comments based on the region where I'm based. I'm based in Dubai. And I would say the first big trend that we saw was the adoption of contactless across the globe. And the contactless infrastructure is key, not only for cards, but really for digital wallets, for all the pays that are coming on board, whether it's Apple Pay, Samsung Pay, Google Pay, you name it. That's an infrastructure that has grown significantly across the globe. But I would say right now, countries like Russia, the GCC countries, have close to 90% of contactless adoption. In Saudi Arabia, 30% of the transactions at the point of sale are already involving a mobile device. That was a trend that we had seen before, but it has drastically accelerated as a result of the pandemic. There's increased interest from consumers on knowing how to use the technology, and obviously all the merchants need to have that infrastructure in place. The second trend, obviously, is e-commerce. We saw debit cards that had never transacted starting to transact with e-commerce. Consumers that had never done a transaction before doing it. We saw triple-digit growth even in sub-Saharan Africa with all the food deliveries. So even though during the pandemic, the physical transactions were decreasing or dropping, still growing very significantly, as I said, triple-digit growth. And the third component has to do with P2P, person-to-person, and moving funds in general, whether it's domestic or internationally. That's also one of the fastest growing channels that we have. There's also an interest at a global policy level to continue providing better and less expensive solutions to move funds. And that's another area where we're investing with many partners to ensure we have these capabilities fully deployed.
Great, some interesting stats there. Thanks, Salvador. I want to turn to Goldi. Several of you have mentioned crypto and expanding to explore crypto, and Goldi is right up his alley with First Digital. Goldi, what are you seeing? coming out of the pandemic?
Thanks, Julie, and thanks again for the invitation to be here. So I think everyone talked exactly spot on. I mean, in the past 18 months, if 18 months ago we would talk to merchants and acquirers and PSPs, gateways, and we would tell them, how about you start accepting stable coins and other digital currencies, they would look at us as we're holding something radioactive, and they would say, please leave the building. We don't want to touch this. But today, 18 months after, you can see all of the big techs out there are trying to make their first steps, and some are actually very far advanced in this. And again, Salvador from Visa, we have Visa and MasterCard declaring that they want to be the rails of money, not just payment by plastic, but they want to be the rails for money transfers for peer-to-peer. They want to be associated with stable coins and cryptocurrencies and everything. We see PayPal making their first moves in the last 6 months. So what we've been witnessing, I think, is, first of all, obviously, merchants are asking for more solutions that are not cash-based, and stable coins are part of that for e-commerce more than anything else. But also, we've been seeing big tech moving into that direction, right? With, again, Visa backing Circle, probably one of the largest and best companies in the space today. MasterCard also backing another crypto company called Consensus. And I think we're going to see a lot of interesting things coming next in that space.
Definitely, definitely. You know, one of the things that I think each of you have touched on is the movement away from cash. The numbers that we have, cash usage globally is still around 30%. It's been coming down maybe 1 to 2 points a year. Clearly, it's beginning to deteriorate even faster now as digital payments are accelerating. So the question is, what are you seeing as cash is beginning to become obsolete? One, are these changes that we're talking about here to stay, right? And then two, what does that mean for the broader economies? You need to think about the unbanked, right? The small businesses who are very light when it comes to banking services and options. So how is this decline away from cash beginning to change all those things? What are the adjustments that have to be made? Jeremy, do you want to start with that one?
Sure, I'm happy to. I mean, I think there's sort of like cash is a product, right? It's a product of central banks, and it's a product that people like. And there's features of the product. It's private. It is a bearer instrument that you can hold and possess, and it has settlement finality. So it's an extraordinary invention, if you will, and it's really important. I think the move to digital payments, on the one hand, you can look at it as, wow, this is more efficient, and we don't have all of the the excesses, if you will, from traditional notes and coins in circulation. But I think the flip side is that people value the ability to have final settlement and the capabilities of what cash exists as a product. And so I think what we're seeing happen in the world today is this incredible demand for digital currencies. Digital currencies are growing at an extraordinary rate, and digital currencies are demanded by individuals that want to preserve some of those features of cash. And it's an interesting thing because you get the combination of effectively highly efficient payment and settlement. In fact, the promise of digital currency, of course, is that you can settle a payment transaction at the speed of the internet at a fraction of a cent. And do that without a payment network taking a fee or a traditional acquirer taking a fee. And so moving towards ubiquitous, interoperable, effectively free value exchange. But you can preserve some of the things that I think people really care about in terms of privacy preservation and security. And so when we look forward, what's the future of not just electronic money and digital payments? What's the future of currency? What's the future of base government money versus private sector, privately issued forms of digital currency? These are all topics that are kind of swirling together as we evaluate that. And I think for many of us, and I include myself in this, it's actually hard to even see what might be the case, say 5 years from now. And the technology developments are so profound. Blockchain technology, the ability to have money that can be programmed, financial contracts that can be programmed on the open internet, that is just such a huge breakthrough that most firms, corporations, financial institutions have not even begun to consider. And so, I guess my view is cash will shift to digital currency, and digital currency will grow and proliferate pretty massively, as it already is, into trillions and trillions of dollars of value. But the answer can't just be, let's jam this into closed loop, private, controlled, centrally administered systems. We really do need to think about how we embrace what the open internet is bringing to all of this.
Goldi, why don't you follow on to that with your view on digital currencies and replacing cash and what that might mean for the economy, the unbanked, the underbanked?
Well, I think that's probably the largest opportunity that the companies that we've talked before are seeing, is that e-wallets are literally replacing cash. And again, GCash is one of the best examples for this. But worldwide, we're seeing companies driving more and more users towards their e-wallets, because they understand that wallets are the future of bank accounts. Because if 40 million people are using GCash today, then maybe a year or 2 years from now, they wouldn't even want to have a bank account, because those wallets are replacing their need to have a bank and to get cash out of their ATM. And they can just use e-wallets to make contactless payments, peer-to-peer transactions. And I think that what we're witnessing today is this transition period, because governments also understand that cash is the past, and they need to move forward with digitization, and they need to create digital currencies. And by the time they do that, and I hope it's going to be in the next 5 to 10 years in most countries, but by the time they do that, I think we're going to see a lot of e-wallets out there, like Marta's GCash or Circle with their products. And I think those companies are going to be the big winners of our time. And by the time the governments get that digital currency out, those companies might even become the new banks if banks won't wake up.
Such an interesting point as far as the digital wallets and all that they're doing to really expand banking services. So let's turn to Martha to hear what GCash is doing more and how that's really proliferating this move away from cash. And then I want to turn to Dax and hear how HSBC is defending its territory. Martha, do you want to start?
Sure. So what we're seeing in terms of statistics is that our wallet is used at least twice a day by active users. So imagine now, whereas before, like when you go to a bank, you like go there like once a year, twice a year, or once a quarter. But now, I mean, with the digital wallets, they use it twice a day, and that's not the logins yet, right? So what it encourages actually is the velocity of the movement of the money and the diversification of the use of cash, right? So because everything's just a tap away, it accelerates even financial literacy. In the Philippines, where bank penetration is very low at 35%, you have a large part which is unbanked. Not to mention that within that 35%, there are what we call underbanked, those who just use their bank accounts for savings and just keep it there, or for payroll, just keep it there. But now we see people more actively involved in decision making and in managing their finances. It's so heartwarming to see that we now have fisher folks using e-wallet and subscribing to various financial services, right? So I experienced it myself. I went to the beach a few weeks ago, and I didn't have cash, and some fisher folks went by and they were trying to sell me their day's catch, and I said, I don't have cash. And then they said, oh ma'am, but we have GCash. So I ended up buying all of their catch, and suddenly, opportunities are opened up because of that. We even have like even wet market stall vendors using it, tricycle drivers or the ones that are using the motorcycles for their livelihood. All these supposedly unbanked or unsophisticated in terms of their financial services behaviors are now involved. So the financial inclusion as a vision is slowly becoming a reality. So that's what's really inspiring us to do even more and to innovate even more.
Yeah, the reach is really fascinating. Let me turn to Dax. I want to hear the HSBC view as these wallets, usage of wallets are proliferating. They're adding new users. They're adding new services like credit, insurance, without branches, right? How does HSBC view this new world?
So the world is always moving, and there are always trends, but we as HSBC are in business because of our customers and our clients. So that is very, very dear to us and at the center of everything we do. And every day we try and improve on what we can do for our customers and really learn from that. So we have a very profound corporate social responsibility in terms of access to our payment infrastructure and access to everybody. We have a corporate social responsibility about enabling families and everybody to learn about financial responsibility early on. So from our initiatives in schools to locally, we are very, very focused on that. So that is our foundation ground. And yes, absolutely, we take that seriously. We are also very focused on digitization. So where we can enable payments and enable them to work straight through, to be able to work across the globe and to be able to introduce the right technologies, we are very, very focused on that as well. But it is very much a balance between the two. And it's important to remember, nobody wakes up in the day and thinks the reason I'm waking up today is to make a payment. Everybody is living their everyday lives. So really for us, it's about being seamless in the background, but also as everybody understands the payment space more and more, it's about that simplification. And in today's world, we have with so many choices in terms of how we transact, where we transact, how does that all work? The more we focus on that simplification and the ability and the ease around all of that, that is really, a key integration focus as well. But we are very, very balanced because, what we do impacts people across the world and around the world. And we're very keen to make sure that accessibility is there. And we deliberately have initiatives that support that in balance. So, as I say, a very keen social piece which we're driving on, equally a very centered digitization piece that is getting more exciting by the minute.
So education, inclusion, delivering within the communities what people need, right, in a simple way through technology, sounds like the answer. And Salvador, let me ask you, Visa being sort of this neutral party in between all of this, right? Visa wants to be the enabler behind the scenes, no matter whether a payment is moving through a traditional banking system or through a wallet or via crypto exchanges. What is Visa's view here on the shift away from cash? All good, right? But how do you maintain that neutral positioning within all of these different ecosystems players?
The need to displace cash is very significant for everyone. And I don't think that even with the pandemic, as Jan was mentioning, cash is necessarily decreasing. So I think the pie is big enough to really have many solutions and many ways to support consumers and merchants displacing that. Our focus is still enabling the small and medium-sized businesses. According to our estimates, we have just in our CEMEA region 60 million small merchants that are not accepting digital payments. So the gap is still very significant. If we look at a country like Russia, which has advanced significantly in the past few years, the official figure from the central bank is 70% of retail transactions are digital. There's still a 30% cash. So what Visa is doing is really working with all the partners. We have always been an open loop. We offer our rails to our traditional clients, primarily financial institutions. But right now we have a broader scope of partners we are working with. And that's part of the strategy that we have. I would like also to add, going to the point made before on how seamless the payment experience has to be for consumers. We are seeing very interesting trends also in terms of development of new payment ecosystems, which is not only the payments experiences, social networking, is e-commerce. It's a mix of traditional players with emerging players. And we need to be part of that equation. I think the payments arena needs to be scalable, interoperable, and global reach. And those are the key attributes for a company like Visa to continue with this mission to ensure everybody is enabled to digitally transact.
Yeah. So we heard a lot about all the opportunities, all the great things that digital payments can bring. I want to hear a little bit about the challenges. What are some of the challenges, some of the risks as we move into this increasingly digital environment? With crypto, it's around security, custody, volatility. We have fraud issues with cards. We have infrastructure challenges with the technology generally. Acting locally, acting globally. Who wants to take a shot at the challenges that you're facing? Maybe do you want to start with Jan?
Yeah, I can just offer a couple of thoughts. So first of all, I feel that the pandemic put us at a tipping point, and people will want to hold money wherever they feel comfortable. We need to understand that some people don't like bank accounts, some people prefer e-wallets. So that's kind of one side of the aspect, and that's where the store of value happens. On the other hand, it's really the acquiring or enablement at the point of sale, because especially for the micro businesses, it's very difficult to transact digitally unless we bring the cost down. So it's great that we all talk about the fantastic visions we have how to do something, but we have to understand that currently the perception of cost of cash among many people is close to zero. Right? I know that there are some risk associated with handling cash and all of that stuff, but what we need to do as industry, in my opinion, we have to bring very attractive proposition to the merchants, and especially micro and very small merchants, which are driving many economies around the globe. And we will not be able to harvest 3%, 4%, acquiring cost for these transactions. It's just not going to happen. So I think that's kind of one aspect practically. The other thing is we all love payments. We are payments geeks and enthusiasts. We like to talk about payments. People don't want to think payments, and that's Martha's point, right? We need to bring it in a layman's term, very easy to use solutions where people will not have to think about how to pay. They can really focus only about the how much, and it happens. And the other aspect which I wouldn't like to underestimate is the socioeconomic situation today around the globe. I think we all believe that the economy is becoming global, but we also see a lot of examples where the countries are trying to protect a little bit from the outside world. And then don't forget, cash actually has a lot of national symbols on it, right? People are actually proud using banknotes and carrying banknotes. And that's where I believe some of the cryptocurrencies may have a bit of a difficult time. And that's maybe the central bank movement into the central bank digital currency, where they can bring some of these national aspects and actually have people being proud of using this new payment method or store their wealth there is going to be important. I'll stop there because there are many technical challenges. I'm also a techie, but I'll leave it to my fellow panelists.
Great. Let's go to Martha on this one next.
So as we get into the digital world, especially in the Philippines, what we see is there are a lot of scammers out there. So no matter how secure our platform is, the challenge really is in educating people about safety measures, simple as not sharing their MPINs, using biometrics instead of just the passwords. So and scammers are being so creative now, and they keep on just evolving, and with the hardships that we're feeling right now, so people would really be very creative to find like ways of living, right? The second one is ID, national ID. So in the Philippines, we don't have a national ID. GCash is the informal national ID now, having 40 million subscribers in our system. But it's still best to have a national ID, so we get to control and have one official identification for everyone. And as we get to the base of the pyramid, all the more this becomes important. So those are the two things that I think are the main challenges that we face.
Thanks, Martha. Jeremy, what are you seeing in terms of challenges and risks on a day-to-day basis?
Yeah, I think the challenge that I'm seeing and thinking about is maybe a little bit more macro, which is really the advent of digital currency technology has created a world where effectively financial value and financial contracts can be exchanged and executed just instantly globally by anyone over the public internet. And so we now have a world where there's immediate global reach for money that is entirely peer-to-peer, whether between a person or an entity and a business, that breaks all national borders and boundaries, where financial contracts, whether it be a lending arrangement or some other more complex form of economic contract, can actually be implemented in code between entities on the internet. And this whole new kind of crypto economic system that's being built poses huge challenges. It breaks the expectations that financial ministries and central banks have about certain ways that money is governed. Just like in the early days of the commercialization of the internet, the idea that anyone could broadcast their opinion to any other human on the planet without any intermediary was a pretty radical idea, and made a lot of governments very, very uncomfortable. They had, very tight controls, national monopolies. They licensed who could actually make their opinion known or censored, and so on. But ultimately, like society and commercial institutions sort of voted with their dollars and said, we actually prefer this open, connected global infrastructure. It's just far superior for society and the economy. And so I think we're seeing that tension today, which is a radical breakthrough in the openness of the financial system and what that can mean for individuals and firms, and governments really, really struggling to figure out how to, in their eyes, kind of put the genie back in the bottle. But the genie's not going back in the bottle. I think it's out, and it is doing its magic. And so but it creates real challenges because there are important risks. There's financial crimes risks. There's fundamental financial stability risks. That there are bounce of payment risks and various types of things that are important. But I think that this sort of organic growth in public internet money is irreversible. And so now it's just really, I think, having the existing kind of not just regulators but other institutions that interact with this learn how to adapt to that new world.
Yeah, you bring up a great point and a really big question mark when we think about digital currencies, and that is regulation. And you mentioned, that the genie is out of the bottle, and I think that's right when we see the amount of volumes that are out there and the market caps of some of the currencies. What do you think that regulators might do, though? What is something that they can do to begin to get a little bit more of a grip on what's happening in the DeFi world?
Yeah. I mean, it's still really early days in this. A couple $1 trillion of market cap is still quite small. When you think about, for example, kind of fractional reserve money, commercial bank electronic money is $130 trillion of value today in the global economic system. The financial assets as a whole, equity assets, debt assets, et cetera, about 350 trillion. So we're talking about $500 trillion of value that exists in the legacy financial system. And so the numbers, again, are quite small. I think when you start getting into tens of trillions, and more, then the stakes get a little bit higher. But I think there's an appropriate amount of attention from regulators on this. I think, fundamental controls around identity and record keeping and and making sure that this this technology isn't abused by tax evaders or criminals, and making that firmer. You're seeing some jurisdictions take a harder line on green energy utilization of some of this technology. Where some platforms have the potential to be higher usage in terms of CO2 emissions, there are other dimensions to this, because so much of this now kind of leads into the world of securities and what are securities and what are all these different token instruments and how to classify them. But I think I tend to be optimistic just in general, and I'm cautiously optimistic that the sort of advancements that are happening from a private sector perspective and ultimately what benefits can be brought to people and businesses will ultimately get reflected in sound regulatory policy as well.
Yeah. Let's stick with this topic. Let me turn to Goldi, and then we'll get back into the broader look at risks with our other speakers. Goldi?
Yeah, thank you. I mean, maybe back to talking about risks. I think that the biggest risk we have right now is actually other humans that are taking advantage of people not really familiar with what's happening in the world of digital currencies. And what we're going through in this world right now of money digitization always reminds me of what happened in the telecom industry. That we've been making phone calls for about 70 years now, probably a bit more. But and the infrastructure has evolved over time, and now we can have a phone call, but we can also have a video call, and we can have emails on our phones because the infrastructure have changed. But in essence, we humans, we still do the same things. And as that infrastructure, by the way, evolved, we had a lot of people taking advantage of that telecom infrastructure. The most, I think, known person was obviously Kevin Mitnick in the US, right? That was hacking AT&T Telecom all over the place. But I think that as the infrastructure now is evolving in digital currencies, sure, there's a lot of risks in how to handle that safely and how people should store their money. But really, what I think is the most dangerous risk that regulators need to handle is making sure that it's hard for other people, I guess, to run scams around that, like selling. We see people selling Diem, which is the Facebook-led cryptocurrency project, although it hasn't been released yet, right? And I've seen websites selling USDC. Well, it's not really USDC, the currency that Circle is after. So I think this is where this is part of those small baby steps that we're having while we're digitizing this world. And I think that 10 years from now, we won't even remember this.
Yeah. Let me give. We're getting low on time, but I want to give a chance to Dax and then Salvador to answer the questions about the challenges and risks that are most prominent in your minds.
Yeah, absolutely. And again, I focus very much on regulation is absolutely key for us. And the best organizations globally self-regulate. So if you are doing the right thing anyway, every regulator is going to back you. And in terms of, the key tenets of focus, if you look at, and this is agnostic of any payments technology, whatever the technology, we are focused on our service. Our customers want to know that their payments are reliable and that their payments get through. To some degree, again, it's not about the payments mechanism. It's about knowing that if I want to pay you, I want to know that I've sent the payment and that you've received it safely, and equally vice versa. So that's really, really key to us. We're also clearly focused on the digitized world. And again, that comes from a place of safety and protection. So we are very focused on our cyber agenda, and that is something, again, that is at the heart for our customers, and therefore we are very diligent with that. There's always, on all of these agendas, more work to do, but that is very much at the heart of what we focus on. And our third tenet in terms of our focus is really then about that education. So again, irrespective of, the medium of any payment, we have that responsibility to educate from a very, very young age, the social responsibility and the personal responsibility about financial management. So this can become at a very young age, with a mother and a child and explaining how that works, and then being able to sort of build on that in small, short steps. It then leads to a lot more once you get more financial responsibility. But we are great believers that, you know, what you do when you have a small amount of money, that same ethos permeates through however much money then comes through the system. So what we look to do is be the exemplar in terms of spreading that word across the globe, and we look to raise that awareness across all of the customer groups that we work with and their families.
Really important, definitely. I'm going to give the last word to Salvador to share with us the challenges on his plate, or any other opportunities he wants to comment on.
Thank you, Julie. I'm going to be very brief because I realize we run out of time, but I think it was already mentioned, security, trust, and confidence is key in payments. If we don't secure that, we won't succeed. And that's something that takes time, and the end user has to feel comfortable with it. And that's the number one priority for all of us who are in the payments industry.
Yeah, absolutely. I'd like to thank our esteemed panel. This was a great discussion. I know I learned a lot. I hope you, our audience, really learned a lot and enjoyed the discussion, and start using your digital payments more and more. Bye, everybody.